Hello, my friends. Your old pal Peace Love Music here, and I have Crypto Landy joining us today for an episode 11 of Learn TA with Landy. Landy, how are you doing today?
I'm doing well, and I hope you are doing well, Peace. And I hope everybody out there in the audience is doing okay because today we're going to talk about fear, uncertainty, and doubt in these markets, especially considering the current market's price action. And of course, we're going to be taking a look at Bitcoin to see what's going on. We might even touch on traditional markets just to check on where they are. Maybe even we might try to go through kind of the whole picture here to kind of paint the picture of where things might be headed for Bitcoin. But we're going to focus on that fear, uncertainty, and doubt. And we're going to hone in on it because often we hear, oh man, price ripped to the upside. I wish I had bought more of XYZ asset or indice or whatever it might be. And then when price actually does come back to where they wanted to get in, people often get scared out of going in to what they had previously wanted to see come back, price levels that they previously wanted to see things come back to. So we're going to talk a little bit about that. And yeah, we're gonna put things in context and try to get rid of some of that fear, uncertainty, and doubt.
Right on, right on. Should I bring up the chart?
Yeah, let's go ahead. Sorry, I had to mute there to cough. Because it's going down to some levels that we've talked about in the past here. So everybody's getting a little shaken. Everybody's getting a little I don't know what's going on. Is it going to go down more? Is it over? Are we in a bear market? And all of the other types of conversations that we've been seeing across social media and even in some traditional media. More on social media, though, as it stands right now. But we're looking at Bitcoin here on the daily, as we typically do. And we're going to immediately go from the daily to look at the weekly on Bitcoin. And, we've talked about this before here. I've also talked about this quite a bit on my videos that I put out Monday, Wednesday, Friday, right? Now, we see that on the weekly, we had a very nice accumulation structure over here. It did not feel nice when Bitcoin was in this accumulation structure for many, right? We then had a downtrend. We entered a downtrending structure here, of course, really starting around March into all the way until October of 2024. So we went from spring all the way to fall in this range before we started to break out in November, right? And of course, we were testing back to the highs here of this previous structure and this accumulation. And, the catalyst there obviously being that price action was headed to the upside at the same time that the elections were happening in the United States. Of course, we saw November 5th, we actually got the breakout of the prior highs of that range. And that then proceeded to get expansion. So we went from an expansive phase over here to a contraction phase, or expansion to compression, and then re-expansion back to the upside here. And you can see that we, of course, have been going sideways. And now we are back into a compressive phase for volatility. And that's just a function of, in this case, the Bollinger Bands that we've talked about many times for what I use for measurement of volatility in markets is, closing in as a function of Bitcoin, in this case, going sideways, and of course, sideways and down now. We are, we're in a potential range break. We're in a breakout to the downside in this case. And a breakout to the downside is otherwise known as a breakdown in price action. And I want to contextualize this on the weekly because we do actually have some pretty clear levels of interest. When we move from an expansive phase to a compression phase, like what we're seeing, where we're getting this, we got the big expansion, and then now we're in a compressive phase. Typically, as an asset is going into a compression phase or an indice, it doesn't really matter. Typically, when it's going into a compression phase from expansion, we will see that the downside standard deviations away from this basis band in the middle, which is a 20 simple moving average for reference, and the standard deviations away from that to the upside typically will act as either supports or resistances to the upside. So supports to the downside, resistance to the upside, as whatever it is that you're charting is going into the compression phase. And we're currently going into a compression phase. We saw that Bitcoin on the weekly is broken down from the 20 simple, otherwise known as the basis band here. We are also in, we were in an uptrend here, and we got some higher lows. We even got a higher high, but we got a lower high close. That was our warning signal that if it tests back down to the bottom range, begins to lose the higher low swing, especially at $89,000, likely to come down. It's actually coming down to some key areas locally on the daily that are of interest. And the potential from the weekly is that it could head lower to this lower first standard deviation at just over $80,000. Now, because we are currently in an open weekly candle, we will see the bands, the standard deviations away from the 20 simple, ever so slightly adjust. I would say the lower first is more around $80,000 if Bitcoin in this case were to continue to head down. And at worst, when going into a compression phase, we can look to the lower second standard deviation. So we work our way from lower second and upper second if Bitcoin, of course, was above the basis, to lower second and upper second, of course, basis dependent. Price action, more bearish bias when below the basis here, even if it doesn't close below the basis. If the daily is trading below the weekly basis, it's in bearish territory. From a volatility standpoint, the lower first is an actionable target at around $80,000. And I do think at worst, down there at the lower second at around $69,500 to $70,000, which would be a retest of this big accumulation that we saw last year. It would be a retest of that area on the high side. If things got really nasty like flash crash, I would look to extremes like the lower third, which is at just under $60,000 at $58,000. And you might note that this was actually the first higher low. Now, this wasn't the first higher low swing, but it was the first higher low swing with a higher low close here on the weekly. We did previously have a higher low swing on the weekly as it related to the $49,000 low in this range. You'll see that the lower third is right there at the start of this uptrend that brought us into this range up here that Bitcoin is threatening falling out of at this particular moment. So we do need to be aware of these targets. How actionable are they? Like, when we talk about like, hey man, I wish that I had bought more in this range, everybody that was talking about price when it was moving to the upside was talking about, man, I wish I bought more in this range over here, right? Well, now those same people that that ostensibly on social media have so much conviction are now scared that Bitcoin is coming down to lower prices. When we talk about having conviction, that means that you are actually happy when price is headed down because you have conviction. You want to get more of this particular asset. I am that way. I would hope that many others that are listening or watching here are that way as well. If you have conviction in Bitcoin, you should be happy that it's headed down. Maybe not thrilled with the price action and the red portfolio, but it gives you the opportunity to identify areas of interest where you personally would want to get in and get more Bitcoin, right? And in this case, immediate actionable targets, should things that we're going to talk about in just a moment occur, would be $80,000. Anywhere under there, we're looking, probably mid to low 80s, right? Bitcoin is currently trading in the mid to upper 80s right now at 86,100. But if it does start to lose some specific areas, looking mid to low 80s, then from there, mid to upper 70s, and then possibly mid to lower 70s by that lower second standard deviation. We still need to talk about the upside. because this market changes very quickly. We can even just observe in the previous range some of these wicks as things were falling to new lows during the week. We had, this higher high, lower high swing over here, and then price dumped down to 56.5. Everybody got really scared, and then it stayed in the range, rallied back to the top side, had a lower low. Everybody was freaking out again, and then rallied to a lower high, and then another lower low, and everybody's freaking out again. We need to see where this closes by Sunday. That's going to give us a lot of information. If it closes below the basis and it hasn't already tapped on the lower first, I would look for it to try and tap on the lower first, wherever that updates to. So if it doesn't tap on it this week, what we'll see is further compression, meaning the lower first will come up more. Maybe it will be somewhere in the mid to lower 80s still, but it will likely come up more if price does not head down and hit it. Same for the lower second. If Bitcoin closes here, let's say right here, right now, this lower first would update and come closer to price action. Lower second would do the same, likely put it in the still mid to lower 70s areas, but probably above $70,000. To the upside, we have pretty strong levels of interest to the upside too, above the basis, which we do have to pay attention to. If Bitcoin were to turn around and head there right now, it'd probably update to around $92,000. This is going to be relevant for what I'm going to talk about on the daily. Right now it's at 91.8, but if we start to get a buyback, like right from here, I would look for this to update to $92,000. That's going to be a key point. So I want everybody to have $92,000 stuck in their head. And in fact, I'm going to help everybody out here too. I've drawn a whole bunch of arrows, and these arrows are defining all of the weekly band levels here. So you'll see that I have the lower third and where that price point would be at around that 58.5. We've got the lower second at right around $70,000, slightly under at 69.5. Lower first at that right around 80. Basis right around that 91.8 to 92. Upper first, upper second, upper third, right? And we can even give ourselves a little bit of help for those levels and kind of look at how that relates to the daily here. So we can go ahead and just throw some horizontal rays here to just kind of approximate those levels. And we don't have to be exact here. This is just to help us visually on the lower term timeframes to kind of identify where those areas of interest are, interesting as it compares to the daily. So we'll go ahead and we'll just mark those out. And these are going to be the volatility levels of interest on the weekly as it stands this week, right? And let's go ahead and just move this a little bit. And we'll drop down to the daily to discuss. So let's go ahead and get our arrow a little bit closer there as we switch to the daily. All right. So no support and resistance right now. We're looking at trend. Trend is a downtrend on the daily. Support that Bitcoin has been looking for. It's basically on the last line. It's on the bleeding edge, right? We're seeing that on the daily here, where price is currently trading. We have the close open candles here. So we've lost all of the actual structure here. We lost this little bit of a consolidation high to higher low. We lost this low and all of these lows and swings. And now, Bitcoin has lost the close open here, and its saving grace right here is the first bearish candle from the expansion on the daily from the prior range. So we had, still in range over here, 72,600 or 73,600. And the prior high of that previous range was 73,835. So this was still within range, higher low, expansion up. During that expansion, the first bear candle or the first red candle had a low of $85,000. And that is the bleeding edge of the bid zone for Bitcoin up here. If it does start to fall apart, then we start looking to volatility levels of interest, and that would be this lower first here that I marked from the weekly, and that is at $80,000. So that's kind of the more actionable things to watch to the downside from here that are more immediate. One of the other things I want to note here is this is a full-on consolidation, compression of price action to break out to the downside, otherwise known as a breakdown. But this is an expansive phase while losing support. So we're hitting the check boxes that we need to see for our bias as we went into an expansion into support. Now we're losing support. And if this starts to bleed up to higher term timeframes, then we start really, even as it relates to those higher term timeframes, start entertaining those lower targets. And in this case, we can go through and kind of, see a few other things here. We can start adding some things. I want to know, okay, are people really bidding as price is falling? And we can just look at volume. And now, yes, it's volume of buys and sells, but for every sell, there is a buyer. And are we getting increased volume? And one of the things I want to note here, and we're going to squish this chart down so we can see volume. As Bitcoin has been in this structure here, this is, a consolidation structure. We're getting our first bigger expansion as it relates to the range and outside of the range lows. But you'll see that volume has been trailing off. We do have periods of higher volume of buying and selling. And what I would say is independent of whether the candle is red or green or whether the volume bar is red or green, what we're seeing is less activity or less volume being traded in the market. Again, because for every buyer, there's a seller. For every seller, there's a buyer. And in this case, we're seeing volume trail off in a bigger way. And, we saw this happen when Bitcoin went into this range. Yes, there was very high volume over here on the low, but we saw volume that pumped Bitcoin up to the prior range here on the daily. Then it trailed off, and then it hit a major support right at $49,000, and then it continued its downtrend. And even that was a smaller bit of volume as it compared to what we saw going into the new highs back there. And then we saw on the way up higher volume getting to the next range there, and then volumes trailing off. So what we're looking for is a nice high volume low at this point. And we're going to be looking at the main areas of support and resistance that we've been talking about this entire series. So let's go ahead and get to support and resistance. And let's take a look at what the local areas of interest are and what some of the criteria is going to be for further downside as kind of checkpoints on our charts here, and confirmation of specific areas of interest if they are either lost or maintained. So let's zoom in. So we had our range here where we had the critical zone in red with a major Fibonacci level that we've talked about prior. That is the Fibonacci level, as you can think about it as percentages, and I'm going to explain it in percentage terms. We have a pull where the high of the prior cycle at $69,000, we're taking a measurement from that to the low of the bear market at $15,500, and then we get a 1 or 100% plus, in this case 16.8 or 168, which would be 16.8% above that structural pull from. So basically think about it as 16.8% above $69,000 as it relates to that particular fib level. We are going to get into fibs in details in the future here, but that is an important level. It helped define this range with a nice higher low structure over here on the way up. We have our critical level. Let's get rid of the bands here for just a moment. We had the daily levels. We had a nice higher low, helped define this range here. Then we had a bit of a mid zone around $95,000 to $96,000. We have that weekly higher low close. We have that weekly higher low wick at 89. Above there, we have a really good bit of main overhead resistance and support. This area of interest at 101 to 104, also around a major fib level at the 1272 or 27.2% above the $69,000 all-time high of the prior cycle. And then we have the deviation range highs up here that also became very heavy overhead resistance. So this is a pure zone of resistance. And then we had a pretty pure zone of support. So at the extremes, we had 88,700 on the area of resistance. And then we had at the extremes to the top side, not including the all-time high being because it failed to close above there at about 108,400. So overhead resistance, underside support. We're seeing a breakdown from support to the last line of daily of a possible daily bid zone, which Bitcoin is kind of playing in. We can even add to this a little bit and define this as another red zone if we want, just temporarily here. If we want to go full hopium here, and we can go hopium style and draw a little box around this, and then we can say, it's in the zone still. Well, no, it's technically losing the main supports because the actual higher low is above right here. This is basically the last line of defense for price right now between the close open at 87,340 and $85,000 near on the dot at $85,010. So Bitcoin is in a critical area that it needs to hold on the daily and higher term timeframes on closes. And that very edge is going to be at 85. If it does lose that, we're looking at continued expansion below the last line of a support zone at 88,700 and a major fib, and major expansion below the last line of defense for the daily here at $85,000. And that's where we could then entertain that lower first on the weekly at that $80,000 first, and then 80 to 85, mid to low 80s area. And then below there, we start looking upper 70s to 80, and then lower 70s, mid 70s to lower 70s as a retest of that prior range. So right now we are in expansion. We have expanded and closed below the major support level. So below this wick low and the major fib level there. And in this case, we see the close coming in yesterday below this area, giving us a confirmation being below the lower second, full expansion, plus a close below the level pushes us down to the next area of interest. So in that case, it is this 87,340 to that 85K. If we again see this area close below, we'll be significantly below the lower second and looking for continuation to lower prices during an expansion phase on the daily. Where does this kind of turn itself around though? Let's say the 85,000 holds on a close. Now I'm looking for closes. That does mean that price can spike through on the daily, but we're looking for closes above $85,000 as the last line of defense for the bulls right here, right now. Where does this change? Well, the recapture of this zone above, and that's going to be our area here at 88,700 to, guess what, $92,000. And you might remember I said, remember $92,000 when we were talking about the weekly. That is the weekly 20 simple, otherwise known as the basis band in the context that I've been showing you for volatility. That's a very important level because above it, more bullish bias, below it, we're more bearish biased. And this just so happens to line up with the bottom side of the range here where Bitcoin needs to start closing above. Above there, we would look for 93.5, that weekly closing higher low, and then right back to where the basis band is on the daily, which is right around a key area that we saw Bitcoin trading sideways at for quite a long time here at around that $95,000 to $96,000, currently coming in at 95.5. Above there, we can start entertaining being back in the range in earnest and not just retesting things bearishly. Picture would improve though, being back above $92,000, which is the main support there. Right now, we are just in a critical save your ass level for Bitcoin. And if we were to look at the daily volume that's coming in, and get rid of, Bollinger Bands, kind of clean up the chart a little bit here. If we look at daily volume, yesterday was a higher volume day, but it did lose, unfortunately, the last line of support here for the actual low side structure where we saw that all those bids come in. So what buyers have done is they've capitulated to the next area, but we're not seeing a ton of volume just yet. So we have to go hunt on lower term time frames. I'm going to go down on a 15-minute and start looking at volume. And what we see is we were getting a bit of a different look just a moment ago when it came to volume in this range here. We were showing much higher volume on the daily where price had closed just under the zone here. If you looked at the aggregated volume in this area, we can see that we saw some consistent buying on the top side around 92 and under. We saw some consistent buying up here around the weekly at 93. But as price headed down, we see this cluster of volume that was coming in right here that popped things above 92 before heading back down. And when we hit the bottom side around 88.7 and under, we saw some volume come in, pop it up. And then buyers weren't interested in as much when price broke it again. Where do we see buyers interested? We saw them at the top side here of this additional emergency zone for bulls. And then now that popped it back up into the last, the real support area, could not hold. And now we've seen bigger volume coming in initially upon this getting to this kind of emergency zone area. I'll talk that I've spoke of 87,000 to essentially 85,000 in this zone. So we have seen a lot of volume. It was a little deceptive looking at the daily. It looked like most of that volume from the daily perspective was up here, but actually most of the lower term time frame volume has been coming in this zone. And then when it popped back up as to test the previous zone that it lost, or the previous support that it lost, it actually tested it as resistance. You'll see that buying and selling volume kind of died off. And now we're back in this zone headed right for $85,000 as we speak. And while we are getting volume, it's not coming in the same size that we saw on the top side. So cluster of volume over here, we are below that cluster of volume, and you're not seeing a ton of volume in here to pick it up, to push it back up to the upside and start breaking through those areas. So bidders are bidding lower and they're waiting. We're also seeing a little less selling. Even though price is moving down, we're not getting nearly as much selling because this is representing buying and selling in these areas, right? And you can look at aggregate volume as the kind of metric there. And this is where we can see that I put the line down just a moment ago, and you see that we just approached $85,000, kind of stop and pivot. There are some buyers coming in. The 15-minute candle just started. We'll see where this kind of ends. We can get a little bit of a bias in these lower term timeframes by utilizing all of the tools that we utilize on the daily typically. We see that we had, sustained downtrend, no trend break, still lower lows, higher lows to higher highs here, right into the resistance, and then, kind of going sideways trendless, and then break down to lower lows, lower highs, lower lows, right? So we're in a downtrend right into kind of the last line of support. We even got compression to expansion into these areas, a retest on a lower high, deviation of the zone here to come up and test towards, immediately sold off right back to the bottom side of this zone. So we're either looking for continuation upon the break of $85,000 to the mid to low 80s area, or we're looking for this to start to create a carve out some support here and possibly come up and try to change the trend. We can evaluate whether or not that's going to be viable as it stands right now, is we have to look at the last lower high. There is a bit of swing structure here that we can look at on the weekly, on the 15-minute here. We have the lower high. Then we got a higher low as it relates to this low over here, but then a lower high swing to lower low. So this is still a downtrend. What would I want to see recovered? This lower high swing first, which is essentially the top side of this range at 80, 87, we'll call it 400. But realistically, not too much changes on the closing trend for this 15-minute until we see closes back above 88,435 in this case. So basically 88,500. So this is either going to have to save itself here or break down, and then pop up to another lower high, and then we evaluate that next lower high. So what we're doing from here on out is we're evaluating the move in progress. It's an expansion on the daily, and we're looking to lower term timeframes. In this case, we're starting to break down. So it's looking like it, could potentially in the next 15-minute candle break this area and get continuation below the lower second. It's kind of fighting with that $85,000, which is also psychological, right? It's a whole number. And in this case, kind of sweeping below it, we'll see what happens. But what we're going to look for is wherever the next low comes in, whether it's here or lower, is we want to see when that low comes in, where does the next lower high come in? Because we'll be evaluating trends. So I'm going to give you a little bit of an example here with the path tool. So we've got this lower high we'll just go on the closes here, and we'll say that this, paints a low here and then comes up and makes a lower high here, and then, closes down here, right? Like, let's say it does something like that. It's not exactly looking as though it wants to do that. It's literally expanding again. But let's just, for example's sake, say what we're looking for. We're looking for wherever the next lower high comes in. We'll say that this is the next lower high to beat, and wherever the next lower, lower low, equal low, whatever kind of a low comes in, what we're looking for is for that to then come up and break the downtrend, right? And then we start looking for a different trend to continue, either higher lows or equal lows, and then higher highs for a trend reversal setup, right? So we're looking for either a low here and then a lower high, possibly a lower low, equal low, doesn't really matter, but we want to see it take out that lower high. That would be what we're looking for, something like that. So again, wherever a low comes in, we're looking for a lower high, or to go out and take out this lower high. Seems a little infeasible at this point. We can evaluate whenever a low comes in, but we're essentially, what I'd be looking for is a lower high, and then either higher lows, equal lows to whatever this would be. Of course, it's not a low right now. We're just using this as an example. Either higher lows or equal lows, or another lower low that then can take out the most recent lower high. So the criteria is simple from here. Wherever you see a low come in, you're looking for the most recent lower high to be broken above. That is a trend break. And then you're looking for higher lows or equal lows from there to start seeing a possible turnaround to try and test higher. Not a daily reversal, because you can just apply all of this to the daily, because we need to see lower term timeframes start to trend break the downtrend, and then start to go into higher low structure or an uptrend, and then have that bleed up the timeframes, the 15-minute to the hourly to the 4-hour, the 4-hour to the 12-hour, the 12-hour to the daily, right? So on and so forth. And that's what we're going to look for from here. As it stands right now, we are looking at expansion to lower prices. Even on a 15-minute, we don't have a low set right now. This is a move in progress, and there's not much to do. This is sit on your hands time, evaluate where things start to stop and turn, and then you can evaluate whether or not you want to get into the market, either via buying or longing or whatever it might be. The biggest thing is what I'll tell you is I'm bidding at intervals, right? I was bidding at the $88,700 to $92,000 level, buying more Bitcoin. I am also buying more Bitcoin here. I have orders that are getting hit in these areas, but I'm laddering down as price falls to the more significant areas. Like, for instance, we talked about $80,000 on the weekly. I have bigger buys there. And if it heads further, let's say it tests that previous range, $70,000 to $75,000, I have even bigger buys that are going to be there. And as price continues to go down, I'm laddering into more Bitcoin. Why? Because it is my conviction play. and I am good with lower prices. Give me more. And there's the breakdown, by the way. So we're starting to break down from that $85,000 and pushing on to maybe even all today. We did just have tariff news. Trump has announced 25% tariffs on the EU countries. So, that is also playing a role. But guess what? Prior to the news, we already saw this move in progress to the downside. A lot of people will attribute what is happening to the news. The market was already in a downtrend on the daily for Bitcoin. It was already breaking down to supports and through supports, and now we're getting news that is exacerbating that move, right? And this move can go on for a while, or we could see significant volume that comes in that marks the low, and maybe the worst will be over after the market absorbs some of the news, gets it out of their system, and gets their bids in and their positions in, right? So I want to open this up to obviously conversation with you about this stuff, and the audience, if the audience does have any questions.
So yeah, I don't think we've had any questions from the audience. I don't know why people seem to get shy in asking questions on here. We do, we have, our audience is usually pretty vocal, or at least we have a handful of them, but we do need to get more people coming in and asking their questions to learn. And I did share out the the link to the excuse me, the link to the playlist for all the past episodes, so people can kind of catch up and see, so they can follow along. But yeah, we just broke down. That was really I don't usually watch the chart that like all day, so that was really interesting to see. How much time is left in that candle?
Sorry, I was muted while I was looking around. So this has got about 5 minutes and 30 seconds left, and
so, I mean, it could actually still snap back.
I mean, there is that possibility. We're starting to see what I was talking about. We have to find the volume, right? So we're finding this is selling biased, right? But as price is heading down, volume is increasing because for every seller there is a buyer. So buyers are still buying, but they're not outweighing the sellers in this case, which is why the candle is moving down. And this is where now we're in that exact area that I just spoke of, right? As we're monitoring this live, we're in the mid to low 80s. So we're right in the zone. And it is possible that we go and test that weekly lower first standard deviation, but we see that now we are getting lower term time frame buyers trying to buy this up. Candle is getting larger here on the 15-minute, and we can even drop to a minute chart here, and we can see what's occurring. We have below this critical 85,000. Like, look at how price respects levels. It's because we are in a market where we have a lot of trading activity from established algorithms that play ranges and moving averages and order book and all of that kind of stuff automatically as it is. But then you've got actual buyers that are coming into these areas in size, and you see that now this green candle here we essentially have gotten a little stop and a low here on the minute chart, but we had more buyers than sellers. So price goes down to find more buyers. Well, we found some more buyers. Now we had more buyers than sellers. Nice big green candle here on the minute chart. And then we look for, okay, well, we've got, a swing low set. We've got maybe a little bit of a closing low set, but this is literally a 1 minute time frame. So Don't get too excited. Hey, everybody, we're going to $130,000 now. It's over. No,
you heard it. You heard it here first. I'm DeOrganized.
No. But when I tell you that I'm also a bidder in these areas, that's what I mean. Like I'm waiting for, I'm mid to low 80s. I'm a buyer. I'm buying on the way down. I'm laddering in all the way down, but my orders get bigger progressively as price is falling. So like I didn't spend all of my, once I wasn't even a bidder, by the way, for the entire range. I wasn't bidding until we got to this red zone 88.7 to 92. I'm a bidder here. But I'm a much bigger bidder on the way down to lower prices, because then that brings your cost basis down for scaling into a position. Now, I'm not continuously like, having my orders get hit all the way down. I have specific levels that I've identified. And if this continues down to 80, that's going to be a big level for me to bid. And then below 75 to 80, there's like a softer bid, down to 75 where there's a bigger bid. And then there's a softer bid between there and $70,000 where it progressively, gets larger bids as it goes into $70,000. So I have a specific way that I scale in. And for those that have conviction in Bitcoin and other larger crypto assets, Ethereum, so on and so forth, what you would want to do, and in this case, we have a large stacks audience. So even in stacks, you have those areas where you identify that you are willing to buy. Right. And that's going to be personal to you, your portfolio size, your conviction in those plays. And then as price hits those key areas, you have a set allocation that you are willing to buy in those areas. And you have it from smaller order sizes to larger order sizes for that area. And then that's usually that's the way that I do it. I have smaller order sizes at the top side of the zones to larger order sizes at the bottom. If it breaks down, that starts again, but the aggregate bid of that entire zone just gets larger. So the aggregate bid in this zone between 92 and 88.7 relative to $85,000, which I just had a larger bid that was larger than the entire zone up here. So the total bid here was scaling in. It breaks, and then I had a hard bid at $85,000 that was larger than the entire zone's bid up here, even though it was scaling from smaller to larger bids in that zone. And then further down, as price heads further down, we'll go to the weekly just for context here, and get rid of all the garbage on the charts here. My apologies. I just love making a mess of the charts, so it's completely unreadable for the audience. But we'll come down here and we'll just get
pretty looking.
It is. It looks like you just can't see what's actually happening. That's all. Hey, look at all the different lines and colors. But so like as price heads down into this zone in towards $80,000, I have bids. And I'm a heavy bidder below $85,000 because there's an entire gap here all the way into possibly a retest of this area here at the top side of the prior consolidation structure, between $70,000 and $75,000, right? So, I mean, even just taking the closes here, you got basically 69 to 73,835 on the high. That's a big zone. You can even front run at 75, but the bids just get larger. And then I have particular numbers where my bid is going to be the largest, and then smaller bids to larger bids again. So the lower first, I'll be bidding very hard if it is hit, but I am getting bids hit on the way down to it at this particular moment. So I'm scaling in to a much larger hard bid at 80,000. And then that scale in will begin again for me personally. And you can set this up on centralized exchanges like your Bybits. Bybit is on the top of my brain. Binance, and other even DeFi ecosystems allow you to scale in your bids as well, or place orders, limit orders that can get hit even on decentralized exchanges. So I utilize both decentralized and centralized exchanges for this. Many people like to use Binance, right? And Binance has really good tools for doing this on the spot side. And even on the, for those that do leverage trade, there's leverage trade tools that allow you to do this as well for limit orders. But essentially below 80,000, it's going to be scaling me down to the mid 70s, and then a hard bid there that is going to be a very large bid. But all of those bids get bigger. So the bids that are going to be below 80,000 are going to get much larger than the bids, than the bid at 80,000, and then so on and so forth, down to, our 70,000 lower second here on the weekly. So I'm of the opinion that, I'm okay with price coming down because this is a conviction play for me. right? And so if you have these conviction plays, it's about the reason why we go through this entire process isn't just for trading, but it's for accumulation in this case. So
It's
you do have,
K-Coma. What's
yeah.
up, K-Coma? He just asked, how do you scale your bids? So he missed you talking about the laddering in, but he wants to. Can you give him an example of what you would do with $1,000?
For like $1,000, because I'm taking first, I start at the higher term timeframes, and I like the weekly a lot. So if I have $1,000 of powder, I'm only going to take, that's obviously on the smaller size. So I would take half of that, and I would set up a plan to scale. So my plan to scale would encompass the weekly possible targets, and you can take the more macro range lows, right? So that would be one part of that scaling of $500, and then at the major levels, scaling down into 80 and then 70, and then I still have 500 of dry powder, right? So this in this case, what I would do is weighting, and in terms of the weight, my weighting is less. So in terms of percentages, if you wanted to split it up, you could split it up, and let's say we've got three major areas. So you split up your bids into three bigger zones that you scale into, with a weighting of, I would say 10 to 15%. Oops. You could do 10 to 15% in this bottom side zones. And then as price goes down, those bids are now it increases to 30 to 35%, right? So now you're at 50%, and then the last zone is at like the other half, or 50%. So you could do like 15% at the lows here, and then you're doing 35% at the next checkpoint at like 80, down into 80, and then down into 70 to 75. You're doing the other 50% of that bid. That way you're scaling in, and it's pulling your entry down each and every time. And that's going to be unique to each individual. So like, that's just an example. Like, my bid could be 15% of what I want to spend in this area here, and then 35%, and then the rest 50% of that at the emergency levels, or the last line that I'm willing to bid with that bit. But I would use half of it to do that, because then I have the other half to play with if it continues down further, and then I can make a plan for that. And that's all for accumulation. And that in many cases, that's not the way that I would play the trades. That's the way that I would be playing my conviction plays, and the way that I am playing my conviction plays in many cases in this market as price heads down, for accumulation when I'm buying my conviction plays.
So
it's a very different mindset when we're actually trading, especially
Right.
on leverage.
So by conviction play, you mean something you're buying and accumulating to hold long term, not something you're looking to turn for a profit in a trade. So
Yes, I'm talking about accumulation as an investment. So Bitcoin, Ethereum, stacks, these are for conviction plays, because I'm planning on holding these coins. Me personally, I'm never really going to be selling my Bitcoin. I like to use DeFi ecosystems, where I would rather borrow against that Bitcoin if I ever need to get things done, if I want to, quote unquote, because I don't want the taxable event, first of all. So I'd rather take a loan against it, right? And then participate in DeFi. And then if I need cash for something to go and buy something, then I would do that. I'm not going to sell my Bitcoin to do it. I treat it as I would property, right? Now, it's a very different take on things when we're talking about actual trading. So one of the things that I do along with my accumulation is I trade, and I trade very, very regularly. I trade every single day almost. Or at least if I'm not actively opening new positions, I'm managing my positions every day for my trades. So how would I be playing this? You might be thinking, well, Landy, you have support here on the bottom side of your chart. And then you've got overhead resistance. So typically what we do in ranges is we buy support, sell resistances, right? So even incrementally for lower term time frames, on the bottom side, buy this area and sell these areas, or buy this area and then sell this area. But realistically, it depends on the time frame, because there's going to be different supports and resistances relative to this daily. These are more overarching areas of interest, right? On the daily overall, this was our bid zone for a long time. So I'm taking an opening longs here. And yes, when we first hit this area, I did open longs, but guess what? I was still short from this area. And in fact, it was all trend dependent. So I positioned on lower term time frames. As we headed up and made a new all-time high, found this area that was resistance over here. We deviated to make this high, which was an all-time high at the time. We then lost, came back all the way to this resistance, or I'm sorry, support, and then spiked right back into this resistance, came back down to support. Then we went up and made new all-time highs, and then we held this area that was resistance, that was deviated, and even on a daily held it as support. We came down to this area and held it as support. When we fell through for a lower low here, as it relates to this little uptrend that made the new all-time high, we fell to a lower low. We deviated and spiked the close opens up here with a lower high. Now I went short up here, and then I continued my short position as I added to this short position as we broke down from this higher low here, which was a higher low close with a lower low swing. So the thought process there is we are losing an area that we were trying to hold as support that was prior resistance and very heavy resistance. We've now failing at that area to hold it as support. I'm adding to my short that I took on the lower high. And I added to my short, and I shorted it down to the lower low and into the $96,000 area, took heavy profits. And then when we came back up to retest this area that was just lost, I opened another, I did open shorts in lower term timeframes as scalps, but I added to my longer term short position with the overall goal of playing it down to this area. So I'm still holding on to shorts from this lower high that I added to upon the breakdown. We saw the etchings of the breakdown here, lower low, lower high. Once it breaks down again, that's my confirmation. I'm adding even more to that short position. Took some profits I managed to take some profits around 96, which was an area we had previously identified on our videos on this stream, and my recorded videos. In the same day, it went down and hit a bunch of my take profits and spiked all the way back up to the top side, right? So I was positioning here with larger shorts, and I got in my sells there as well. And then I kept that short position open all the way till this zone. I still kept it, and I went long, and I ended up closing that long in this zone at a loss, but I was protected by my shorts. And I've held the shorts in the zone. I never completely closed out of them. And I was already, taking some lower term time frame shorts at the breakdown of the weekly close into the support here. And I didn't like the look that we were getting there. So I held on to those shorts. I cut those longs at a slight loss. And I'm still waiting to get back into scalp long position and swing long position. But the entire time that I've been doing this with my short positions, I've also been bidding these areas on the spot side of things. So I've been short in leverage markets, and I've been short for over a month in leverage markets, and continuing to hold on to those shorts, take additional lower term time frame short positions as needed, for the tighter ranges that we were playing as we were kind of knocking around a range. Still very volatile, even though the candles look sideways, still very volatile in and around $96,000 with spikes up to nearly 100 and then spikes down to 93.5, right? So there was opportunity there that I was trading in much lower term timeframes, but I was overall short the market for about 30 days, all based on the lower low to lower high structure that we saw. I've maintained those short positions, but as we got to the main support, I started spot buying again. Even though the look was, hey, it's probably going to continue down further, I have a plan. I'm sticking to it. So I was spot buying there. I had a big spot buy here, and I've got more spot buying that's going on here, even though I have a short position open, and I am generally bearish on price action and looking for continuation. I am also a bull because I want those lower prices so that I can continue to buy into my spot positions and continue to accumulate Bitcoin. And I'll give you another tip. One of the things that I do all of the time, no matter what the price of Bitcoin is, and no matter what I'm trading, whenever I am closing out a position and I take my profit and I'm fully closed out of my position, I take half of all of my profits and I save it in Bitcoin. I buy Bitcoin no matter what the cost is, no matter what the trend is. That's conviction. That's what I'm talking about with conviction. I'm bidding on the way down, even though I'm short the market. I'm also, no matter what the price is, anytime I close a trade, half of the profits from that trade go straight into Bitcoin, go straight into cold storage every single time. And that's why I love fear, uncertainty, and doubt. I love volatility. It's in my profile. I'm a volatility trader. I trade the compression to re-expansion. We just saw that on the daily. I was, taking lower term time frame positions to trade this compression on the daily for price action, this nice compression of the bands to re-expansion to the downside. I have a ton of positions open that are short on Bitcoin, but my main position was taken on the lower low is when I started entertaining it to that lower high. That was the confirmation, and then adding to that on the breakdown and the trend reversal setup that we had. So that was where I went macro short, and I've continued to short the market and have a short bias. I have taken lower term time frame longs. I've had some that were profitable. The most recent ones in the past 2 days for those particular longs were very quick open and close because stops got hit. And that's okay because I'm still heavily weighted short and I'm buying spot. And I don't have to worry about closing a spot position because I'm never going to on Bitcoin.
Yeah, man. Wow, this breakdown is I wasn't expecting that to happen on the show. But
I kind of was, to be honest.
Yeah,
the bias was very heavily.
But yeah, that definitely price looks it's a little bit hairy for those that haven't kept some dry powder. So I mean, and we're all at our own stages of learning, right? And so now you're looking at it and you can understand, well, maybe when it's at the top of these bands, that might not be the best time to buy in. It might be a good time to buy in, but usually it doesn't stay there. It's going to be a correction before it continues. And you got to just understand how to read all that. So, great stuff as always, Landy. I think it's it's definitely important for people to be patient and put the work in so they understand what they're looking at. And I really actually do like how you broke down for Kekoma how to scale in like that on a conviction play. And it doesn't like at the $1,000. I know he said $1,000 doesn't have to be $1,000, but the percentages is what he was looking for, and that makes sense. Yeah. So if you have a certain amount you want to block into something, you cut it in half, buy in at levels as it on the find a downtrend, buy in on the downtrend, and buy more the lower you go.
Lower percentage bids to higher percentage bids. It's just called a laddering. It's you just go lower percentage bids of whatever you're allocating, and anything that you allocate. You say I've got $1,000, I've got $10,000, I got $100,000. A good rule of thumb, and of course this is not financial advice, nothing I say here is a good rule of thumb that you will see many talk about when accumulating is take that number, cut it in half, and then you bid with that half and you scale it lower percentage. I like the 15% to 35% to 50%, and then you can chop those up per level as well. So that 15% initial can also be its own scale between, it's 15% of the total that you're allocating, but that's 100% scale there that you can scale in as well if you want to soft bid into something. And then the other 35% can be its own 100% scale that you're going to scale into certain price points, right? And then the rest of the 50% can be its own 100% scale, where 50% of the total is that 100% for that zone. And you can scale in that way. And you can break it up. You can get as finely detailed as you want, or as granular as you want, or you can just kind of do, hey, here's 15% at this level, here's 35% of it at this level, and here's the other 50%. Like, you can go really simple, or you can go really fine-tuned.
It's more important to have a plan than what the details of the plan are.
Yes. And then the main reason why I say whatever your allocation would be, you're like, I've got a 1,000, 10,000, or 100,000, doesn't really matter. Take and chop that in half, and then form your plan around that. And then guess what? You've got the other 50% to adjust the plan as needed. Right. So, and always, here's the thing. Do not change your plans as price moves. If you change your plans as price moves, you are not sticking to your plan. So you have to go in and formulate a plan. You stick to that plan. If that plan needs adjustment, you can adjust it later. And you don't FOMO in and you don't FOMO out of a plan. That's why it's a plan. You've planned for these things. And now, as part of that plan, you have a 50% stopgap of those funds that you can create a new plan with.
Right. You still kind of stick to that old plan with that part of it.
Yeah, because your plan should always have a point at which you are not going to do something, otherwise known as a stop loss if it's in a trade, or I'm not bidding below this level anymore. I'm going to wait to see what's happening, right? Like, there's always that point, and that should be accounted for in your plan. So don't adjust your plans just because. Don't buy or sell just because. You have to have a thesis and a plan of action to implement that thesis.
Right on. I do want to shout out Sparks3D Crypto.btc. He actually indicated to us on the morning show in the chat that he's new to Stacks, and he commented a couple of times in this show, and I didn't actually get to follow up with him yesterday. So welcome to the ecosystem, and you've come to the right place, and definitely should be following Landy, because the guy has great insights on a lot of things, including price and what trends, and what's going on in the space, and amongst them a bunch of other things. So definitely give Landy a follow. And also, to those watching, a lot of the indicators on here are available for free. They're the Landy bands. We have the QR code up here, and also if you just go to Landy's X account, the link is in there. It's a free indicator on TradingView, so you can go get that. You have the spread and everything all like that. It makes it easy to kind of follow along with what Landy's talking about when you're practicing your own trades.
Yeah, and I just want to just kind of call out, like, even on the 15-minute here, just how clean Bitcoin is. One of the cleanest trading assets on the planet at this point. Just how clean it is in terms of the order book and the buys and sells and where things are being placed. You've got, a little bit of a front run of $85,000, knifes through, retests it directly, and then begins to test down further. One of the things that I like to do when a move is in progress is we have this high volume low. This is our bearish high volume low. And, we're looking for this low to either hold up or continuation below it, right? Because if it breaks down, we don't see volume coming in if this low is tested again, then we're looking for volume to start coming in at lower prices. So if it breaks down below this higher volume low, we're looking for continuation of this move down. And you can monitor this. You can do it the same thing to the upside as the downside. There's other people, there's other tools. Now, there's a whole bunch of tools in the tool bag that I'm not getting into, like volume profiles and fib levels that we could be pulling to gauge, where things have confluence to. There's a lot of stuff that I'm leaving out because I want to illustrate that you don't necessarily need all of those other tools. You can just simply look at trends, support and resistance. You do need a measurement of volatility. That's often missed even by some pros. And trend, support, and resistance and volatility make up momentum. And you need to find the confluence between all of those. Downtrend plus, breaking down from support on volatility expansion is going to confirm likely that we are seeing downwards momentum. We can see it, right? If we're getting a different signal somewhere along the way, then we can go, okay, we investigate further, we dive deeper with different tools. But the basics, the simple stuff, often you'll find works even better than getting overly complex with charting and analysis. If you just stick to trend, support, resistance, and volatility, and then those three making up momentum and understanding how those play with each other, then you can be successful in investing, in trading. But it does come down to you're utilizing those four key pillars to create a plan. Without a plan, you will not be successful. I don't care how good you are at reading a chart. I don't care how good you are at technical analysis. If you don't have a plan, you will not succeed. I don't think I've ever met anyone in life that has succeeded without a plan. There has to have been a plan somewhere along the way, right? And even if that plan comes together on the fly as you're learning, you're putting together a plan at some point, and then that plan has to be implemented or executed for you to be successful. And that's really the only way to be successful in markets. You can be brilliant at technical analysis. That's not going to make you a brilliant trader, because if you're not taking what you're seeing and formulating a plan around it, what are you going to trade? You're just going to YOLO in, YOLO out just because you feel like it, So make sure that you have a plan. And those are things that we're going to start getting into as we progress week to week, is into what are some key tips for formulating my plan? Because there is no like, hey, here's a plan for you that Landy's going to give you. It is, hey, here's what you need to put into your plan. And here's how to set up a good plan that is going to be tailored to you, because it's all going to be dependent on how much capital you have, how much you're willing to put into these markets, what does your risk profile look like, and then teaching you to evaluate those things and then formulate a plan based on the technical analysis that you're doing.
Right on. And it's, it all starts with being able to actually look at the charts, the figuring out where the trend's going and looking at what the what the highs and lows are telling us. And then the volatility, and then the momentum. That's actually been one that I was never familiar with. That I've only been, I don't get a lot of time to look at the charts and do much trading. But I've been applying these skills a little bit here and there when I have time in between. There is a perp dex on a chain I'm not going to mention, but that I have used on occasion to do a little bit of playing around, and it's just small amounts of money and just learning how the things work and everything. But it does, from a trading perspective, it does work once you start to understand what you're looking at,
and it does, you do need to exercise it, right? Like, even to this day, I will chart everything. Now it's built into who I am. While I might not take trades every single day, I'm always managing trades every single day, right?
Right.
Because I do participate in the leverage traded markets, both on perp dexes and on centralized exchanges. With my entire goal is to get more Bitcoin, right? That is my entire goal. I know that there might be some that aren't into Bitcoin in that way. It would just apply to whatever your favorite crypto is or whatever you have conviction in. And one of the big things is a lot of the systems that you'll see out there, whether it's GAN or Elliott Wave or Wyckoff theory or whatever it might be. What you got to understand is a lot of the principles that I'm teaching you are built into those systems, and you can take what I'm teaching you, which works, right? It's easily tradable. You see how accurate it is, even as we've been on streams or in the videos. You can see that it's highly accurate, and I'm not doing anything crazy or special. It is simply trend, support, resistance, volatility, and momentum. But that's built into those systems. So if you understand trend, support, resistance, volatility, and momentum, you now, and let's say Elliott wave is your preferred system, you now understand that to a much deeper degree when you go and you study that particular system. Or GAN, you now just start to understand why that system works the way it does, right? Or even I just mentioned Wyckoff theory. Those are the popular ones. You see a lot of GAN theory, Elliott wave theory, and Wyckoff, and so on and so forth. And those are all valid ways of processing what is happening in the market and breaking it down. But if you don't understand why things work the way they do, you'll never really be successful in implementing those systems, because you'll always have questions of why does this work, or why doesn't this work? So understanding the basics, getting that knowledge, which you can then just implement straight away. Or you can get as detailed as you want these markets. And by the way, the reason why there's so many different trading systems or theorems and theses, theses. There we go. It sounds like feces, just like the Senate talking about feces coins not too long ago. But the reason why there is no one rule to rule them all is because there are many ways of breaking things down. But when you drill down to the basics, where we started literally talking about, we're watching a live auction right now. Right. What can we do to take advantage of that information that we're receiving in the live auction? And it's always going to start with trend. It's always going to trend form support and resistance. And then how volatile is price action? So we need a measurement of volatility. And we always need a baseline for that. That's why I like using the Bollinger Bands. I like using a triple set. Some people just like the upper and lower seconds, right? And the upper or lower bands, right? I prefer a triple set. Helps give me a little bit more bias. And then that all creates momentum in the market. So to the upside or downside or sideways.
Right. You can definitely just use a regular Bollinger Band set, like a regular upper and lower band and whatever. But yours gives, obviously yours gives a lot more detail, and there's different things to read off of those, that you don't have in a regular Bollinger Band. So it's worth having.
And we're hitting, like, during this expansion phase, we hit extremes. Lower third standard deviation, got to bounce up. We're hitting extremes again. If we continue closing below the lower second, we're likely to go test that low, that higher volume low, and get continuation down, even if it's just on a swing or a wick. And if it does start to mean revert and grab onto $85,000 here where it just rejected, it could settle low. But we still need to be aware of the bearish bias on the bands, and even above it to the upper first and upper second, which is right at the bottom side of a prior support, right? So even if it bounced in a really big way, very highly likely that even if it hits that upper second right from here, we just get a giant green F off bull candle right back to the upside, multiple thousands of dollars to go hit this major fib level and the upper second standard deviation. Very likely going to pull back from there, as it turns out. And then we evaluate things, right? It's constant evaluation. But one thing that I will tell you is don't fade a move in progress. This is expansion on the daily. It is below even a critical support right now. We'll see where it closes by the end of the day to evaluate continuation to 80,000. And then maybe even under if it gets further continuation on higher term timeframes, if it hasn't already continued down.
The trend looks like it's going down right now.
Well, yep.
And just my jack off realtor read on this is that we're not. Who knows? Maybe it's had enough. Maybe it'll catch a breath at that bottom line you got there now. That white line you got there.
Yeah. Here's the beauty though. Piece. The beauty is we don't need to know. We're not in the business of needing to predict, because we are getting a bias based on our analysis. And if we have a plan, we're executing that plan based on our analysis. One of the things that people often ask is, where do you think things are going? I don't freaking know, but I know areas of interest. And I know that when things hit those areas of interest, that's where I'm interested in. And, through the process that I've taken the audience through from the beginning, you too can identify those areas of interest. And now you can identify conditions. If it breaks below here, we're looking here. If it breaks above here, we're looking here, right? And then you can effectively make a plan to take advantage of that. Anybody that prognosticates that they can predict price action, like I'll get on and I'll be like, hey, look, it bounced in our area. And people will go, look at you being all fancy saying you predicted it. Like, no, that's an area of interest that I was looking for to get hit. I didn't predict the price was going to get there. Price happened to get there. Yes, because it is an area of interest. I was interested and so were others. And it's all about identifying areas of interest, not making grand predictions on where things are going to be, a month from now or a quarter from now or 5 years from now. We go with the flow. If you actually believe in this thing or whatever it is that you're charting and analyzing, then you're making a plan so that you can get more of that thing in most cases.
Right on. Well, I think that's a great place to wrap it up.
Yes, sir.
Awesome stuff as usual, man. I really appreciate this. I think you bring a ton of value to our viewers and our audience, and I really love that we are able to share this with all of them. You guys can catch all of this in the playlist on the DeOrganized YouTube channel. I share it out on X regularly. I actually shared the link in the live chat today, so you can get everything from the beginning and everything going forward. You can catch up on them if you missed them. We got Landy in here weekly giving us the information, plus all of his daily videos. Is it every day you're doing videos now on X, or just most days?
So I upload videos Monday, Wednesday, Friday. So Macro Monday, we do a check-in on Wednesday, and then we do a wrap-up on Friday. So Monday is kind of, what happened over the weekend, where did the weekend close, what is the macro picture looking like in terms of longer-term timeframes, monthly, weekly, so on and so forth. Wednesday is a check-in as it relates to what we talk about on Monday, and then Friday is the wrap-up and what to look forward to over the weekend when markets, traditional markets are closed, because there's a lot of liquidity that is traded on crypto assets when traditional markets are open, and when they're closed, we see typically a lower liquidity environment, and we want to know what to look for the weekly close. So later today, I will have a check-in video. I'm going to be talking about what it is that we're seeing right now, because we talked about all of this on Monday. Talked about this potential move to the areas that Bitcoin is currently moving to as we speak. And then it's going to be evaluating where does today close? What is the potential areas of interest overhead? Where do things turn around in terms of trend? And from here, and what my thoughts are regarding that, and potential areas of interest to the downside for continuation.
Awesome. And you're a regular in a bunch of spaces on X as well. You want to shout any of those out?
Yeah, so typically you'll find me not right when he opens up, but I try to make it to David Gokhstein's morning show. And during the afternoons, you'll very highly likely find me either in the Stacks ecosystem, but I will almost always be in ATC or All Things Crypto with Dave, Cool, and Nat. And then of course a lot of other really awesome guests that come through there. So I'll guest speak over there, and big shout out to Dave, Cool, and Nat, and big shout out to David Gox. He's obviously got a massive platform, and he's sharing that with me by giving me a microphone and allowing me up there on stage. And then at night, typically you will find me. I'll bounce around during the day, but you'll typically find me on Pump Radio with Nobu.
Pump Radio. That's probably after my bedtime.
Yeah, yes, and it's I might have to try to encourage him just to, we'll have a little bit of fun. Maybe call it Dump Radio.
That's apropos for the day, man. Awesome stuff, Landy. I love you, brother. I think you're an awesome dude. You're a great actor in our space, and really appreciate you doing this with us. We are DeOrganized Media, coming at you live on Bitcoin Live Decentralized Broadcasting, bringing you all the content we can possibly muster that might add value to your day. Give Landy a follow. Thank you, Landy. You have a blessed day. And
Thank you,
we'll be
Peace.
back.
As always, I really appreciate you, brother, as always. And it's always a pleasure being here with you. I love getting to talk to you and getting to see that clean shaven face there. Starting to come back.
Oh yeah, I'm half Italian. It doesn't take long. Although Kitty called me handsome this morning, so I might have to shave again. I don't know.
You might have to keep it shaved. You never know. Hey, I mean, I did think it was like an evil twin kind of thing. Like just coming in and what happened to the real Peace Love. But hey, much love to you, brother. And for everybody in the audience, if you are not regularly following what Peace is doing and DeOrganized Media, please do so. If you're just tuning in and just being introduced to this via me sharing this out there and being on here, make sure you follow Peace Love Music on X, follow DeOrganized, and take a look what these guys are doing. Constant alpha all the time, constant updates on what's going on in especially the Stacks ecosystem, but even much wider than that. Big conversations, absolute chads in just about every ecosystem and builders going on. And Peace is leading the way. He is the guiding light. And I love you, Peace. I appreciate you. And I will talk to you again, hopefully next week.
Likewise. Thank you, brother. Y'all have a blessed day. Thank you guys for tuning in. Take care. We'll be back with you soon.